Hello traders, good morning, good afternoon, good evening to you all. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magdi.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. It is neither a solicitation nor an offer to buy or sell any financial instrument. Okay, it is primarily for the TSTW 24 traders. The title of this video is about the two indicators that one must know. Okay, we are going to talk about the two CCI indicators. The two CCI indicators. Okay. Right here, I have the first CCI indicator, which is the commodity channel index. Okay, and we know that this indicator, I have here the CCI period of 24. Okay, as a TSTW 24. Okay, I'm obsessed with number 24, but the TSTW 24 has nothing to do with CCI 24. Okay, now, but because I'm so obsessed with number 24, 24 represents consistency. 24 hours. Okay, that's consistency. Okay, because if you are trading, okay, you must aim, okay, to achieve consistent winning trade. Okay, that's the idea behind 24, consistency. All right, so we are looking at the commodity channel period 24 right here. Okay, understanding the indicator is telling us that, okay, if the commodity channel index 24 is above, okay, plus 100, it's telling us that the price, okay, is touching, okay, the Bollinger Band, okay, 24, the upper bound of the Bollinger Band 24, which is the dotted black line here. The Bollinger Band 24, that's the dotted black line here. And when the CCI 24 is above the zero line, it's telling us that the price at this point in time, very often, in most cases, will be also touching the upper bound of the Bollinger Band 24. See here, okay, if you like to know, I can put the spotlight there for you so you can see clearly what I'm talking about here. Okay, so the price touching the band here, okay. Alright, it's touching the band here. The Bollinger Band also, the CCI 24 is above 100. Okay, here again it's 100. The price also touching the Bollinger Band 24 because we are using CCI 24. If you want to know more about the CCI indicator, you need to go to www.dayprotraders.com. www.dayprotraders.com. Okay, here again the CCI 24 is above the plus 100. The price is also touching the upper bound of the Bollinger Band 24. Also, when the CCI 24 is touching the zero line right here, the red one here, it's telling us that the price is touching, okay, the exponential moving average 24, which is the red one here. Okay, you see here, you see the price just above the red line here. You see the CCI also is above the red line, which is the zero line here. Here the CCI was dipping below the zero line. The price also is dipping below, okay, the exponential moving average 24. Here the CCI 24 is touching the lower, the minus 100 is dipping below the minus 100 level. The price also is touching, okay, the lower bound of the Bollinger Band 24. Now you understand clearly that understanding the tool, okay, the meaning of the tool carefully, okay, will allow you to make a better, okay, a trading decision. Okay, all right, so let's move on, please. Okay, now you can see, you understand the CCI indicator, that the CCI indicator is comparing the price to a moving average. Okay, the CCI is comparing the price to a moving average. You can also watch a video on our channel www.youtube.com/3o, okay, how to trade the CCI indicator like professional traders. We have posted many videos regarding the CCI indicator. If you go to our website www.dayprotrader.com, you will also watch excellent video regarding how to trade the overbought, okay, CCI indicator. And here you can see when the CCI is overbought, reach the overbought zone, one will draw a line. You see, it's starting it for the first time. Here you draw a line exactly there. The price, I'll draw first a vertical line. If you haven't watched that video, I'm just going to go to that very fast. As soon as the CCI closes above, okay, the plus 100, we draw a line to exactly to a level where the price was exactly here. You draw a line here. Okay? So if the price break above it and find a support on a daily chart, we have to use the multiple time frame trading here. We do as TSTWSY008 trader. We know exactly how to handle that. Okay, if you receive a signal above this blue line here, we will buy instead of selling. And here you see the price went up when some traders were selling here because the CCI was overbought. On the other hand, also when the CCI is below the zero line for the first time, we draw also horizontal line exactly there. Okay, here the price is close here. We draw a line and monitor it carefully. You can see that it didn't continue movement to the downside. It didn't continue movement to the downside and went back up. So this is a valid buy signal. But sometimes CCI will be below the zero line, okay, below the -100, and the price will continue the movement, okay, to the downside when many traders are busy buying because they are trading indicator instead of trading the price itself, the number one indicator. Okay, this is about the first indicator that we are talking about, the CCI. The next indicator, talking about the two indicator that one must know, talking about the two CCI. The second CCI is a Consumer Confidence Index. CCI, Consumer Confidence Index. Okay, now this is usually released on the last Tuesday of each month. Okay, the last Tuesday of each month at 10 a.m. Eastern Time. Consumer Confidence Index, CCI. This is the second CCI that you must know. This is talking about the fundamental. As I explained to you before, we must combine the fundamental, okay, with the technical. Here I'm combining two indicators with the same, okay, acronym, CCI, okay, Commodity Channel Index, CCI, Consumer Confidence Index, okay, released last Tuesday of each month at 10 a.m. Eastern Time. That's 3 p.m. London time. Okay, it covers the current month data, economy data. Okay, and it's based, okay, on a survey of 5,000, okay, 5,000 U.S. households. They will question them. They will interview these 5,000 U.S. households, asking them about their confidence, okay, into the future, their view on the economy, how they see the future of their job, talking about wages, okay, because it's based on the belief that if we have more job creation, okay, and also the wages are increasing, so people have more money in their pocket, and we are creating more jobs, people will feel more confident, so they know that, okay, even if they lose their job today, they are likely to find another one, okay, in a short term, okay, so they are confident, okay, and also if they ask them, okay, for instance, do you think that you can get your pay rise this year? And they can confidently say, yes, we will get a pay rise, and then their confidence is quite high, okay? And the third element of this Consumer Confidence Index is the low interest rate. So if we are also having a low interest rate, okay, which means, okay, things to borrow money, it becomes cheaper also, okay, people are confident, so they are confident about their job, they are confident about their salary, that they can have a pay rise, okay, they can have enough money in their bank account, okay, and also, okay, they can have access to credit, okay, not expensive credit, but okay, reasonable price, okay, credit, okay. But when you ask people question, okay, and they say, how do you feel about your job? They say, I'm not sure whether I'm going to be in the same job. They are not confident. And do you ask them, okay, do you think that you can have your pay rise this year? And they say, definitely not. I'm not sure. I don't think so, because the business not doing very well. They are not even sure about their job, and that they don't even expect a pay rise, okay, and the interest rate is going up. That's not a confidence, okay. This cannot create, okay, a confidence or optimism, okay. People are more bearish in that situation, okay. And the Fed, very often we pay a careful attention to this data of Consumer Confidence Index, okay, and it's excellent, okay, one of the best, okay, economics, okay, indicator that as a forex trader, especially the forex trader, you must pay attention to. So now you know it. The last Tuesday, okay, of the month, if it happens that you keep losing money on the last Tuesday, okay, of the month, and you think that the last Tuesday of the month is your worst day, okay, now you know why, because there is a very important news which is concerning the Consumer Confidence Index, a very important news that will move the market. It's a big big market mover, okay, because okay, the U.S. economy, okay, is driven by 2/3, okay, of private, okay, private consumption, okay. So they ask these 5,000 households, which are private households, okay, in the U.S., okay, and they ask them about their job, the prospect of their wages, okay, and also the low interest rate, and if okay, this indicator, this CCI, Consumer Confidence Index, okay, is bullish, okay, and the market, okay, will go up, okay, because it's very bullish. People feel confident about their future. It's an excellent, okay, economic indicator, okay. So one can perfectly, so remember on the last Tuesday, okay, of the month, if okay, your technical commodity index gives you a bullish signal, okay, which means break above it, retest it, and start turning around, or the price display a higher low, as you can see here, okay. So here was a gorgeous pattern here. For instance, suppose here this on a daily chart, the price was low, again the same low, validation of this level as okay, a valid support level. We want to buy at a valid support level, yes or no? We want to buy also at a place where there is a value, okay. So we have a valid support level, and also the consumer confidence is coming on the last Tuesday of the month, okay. Suppose we were here and the price give you, okay, a higher low, okay, as a TSTWS S008 trader, you know exactly that the consumer confidence bullish, okay, and the CCI, okay, is also bullish. You know that you have, okay, excellent swing trading, okay, a trade, okay, you can perfectly enjoy as soon as, okay, the price popping out of, okay, the triangle right here, okay. This is just a quick video talking about the technical CCI, which is the commodity channel index, and also the fundamental CCI, which is the consumer confidence index, released the last Tuesday of each month at 10 a.m. Eastern time, 3 p.m. London time, okay. The respondents are 5,000 U.S. households that are giving their view, okay, are revealing their sentiment, okay, relating to their job, their pay, their wages, okay, and also the general, okay, interest rate, and how they see, okay, the future for themselves. Are they confident? Are they bullish? Okay, if the sentiment is bearish, okay, as I told you before, the sentiment is very important in the market. Also, at this point in time, I need to mention something very important here. When we are talking about sentiment, we are talking about the momentum indicator. The momentum indicator is another tool that will reveal also the sentiment, okay, in the market. So when you see a momentum indicator, one of them is the CCI indicator, bullish, is revealing to us, okay, the sentiment in the market. So when we combine, okay, the technical CCI indicator with okay, the fundamental, okay, the CCI, which is the Consumer Confidence Index, we know that, okay, we have a winning signal. So on the last Tuesday of the month, okay, and we have, for instance, a bullish, okay, Consumer Confidence Index, and we have also our, okay, technical CCI giving us a bullish signal at the right place, at the right time, where there is a value, at a value support level, we will take it. On the other hand, if, okay, the consumer confidence is bearish, you will see for the forex, those who are trading forex, they know that they have to check the news. The market will come down big time, sharp. Some stock traders do not pay attention to the news, and they see all sorts of a crazy movement of the price. They don't know what's taking place. Okay, so if you want to know about the fundamental and also know about the news, you need to go to www.stockasima.com, click on the economic calendar to know exactly the time when these news, okay, are released and how they affect the market. And this particular, okay, news regarding talking about this particular news, talking about the consumer confidence index, is a big market mover. Okay, so if the consumer confidence index is bearish, and also we receive a swing trading bearish signal, okay, from the technical CCI, we will take it also very important. Okay, so one must combine, okay, the technical, okay, and the fundamental. And one can perfectly combine, okay, the technical CCI and the fundamental CCI. The technical CCI is the commodity channel index. The fundamental CCI is the consumer confidence index. I hope you enjoyed this video that you will put into use in order, okay, to make a better trading decision. Thank you for watching, and we will speak to you very soon. We are the TSTW 24 traders.